Hello, my dear students. This is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are quickly going to revise a chapter called Payment of Tax. So, you know that, sir, in this chapter, Payment of Tax, actually, please understand, payment of tax. See, when you are making the payment of tax payment can be done through two methods. I mean, first, for paying the tax, you may use your credit ledger balance, or if that is not sufficient, you can use your cash ledger balance. Credit ledger balance, how do you utilize? Utilization of ITC balance rules we have already discussed in ITC chapter. So that is done. Now we are going through cash ledger. And if you see cash ledger, see nothing but when you have 10,000 rupees GST liability, you have ITC balance of 8,000, you need 2,000 more extra amount to pay the GST liability. That 2,000 will get through cash ledger. So that 2,000 rupees into the e-cash ledger, you can either upload through online method or you can make the payment through offline methods. The online methods, you know, there is internet banking, UPI, IMPS without any limit, credit card, debit card also available. Offline methods, there is NEFT and RTGS without any limit, but over the counter, that means directly you are going to the bank, the counter, and making the payment. So in such case, there is a limit of 10,000 per challan per tax period. So more than 10,000 per challan per tax period, you cannot make any tax payments over the counter. That is the restriction. But understand, the interesting part is that this 10,000 per challan per tax period is not applicable. Is not applicable in certain cases. What are the cases? So if it is government department or notified persons, for them this 10,000 challan limit is not applicable, so they can make the over the payment counter how much ever they want. Next, sir, any proper officer who is authorized for recovering any outstanding dues. So who is authorized to do the recovery of tax dues pending? That officer is recovering by selling the movable property, whatever it is. Sir, he is recovering the tax dues, and the recovered amount he has to deposit in the government account, so that he can deposit without any limit. So over the counter 10,000 limit is not applicable for these people. Okay. Next, finally, any proper officer who is authorized to collect the amount by way of check or DD or whatever it is during any investigation or enforcement activities, those officers also can happily make the over the counter deposits without that 10,000 limit applicability. So that is with respect to the methods of payment, and 10,000 limit is not applicable to these people. So if you see here, for making the payment, actually first we should generate the challan, whether it is an online payment or offline payment. Sir, we should generate the challan, and the challan form is nothing but GST PMT 06, and whatever the amount you have uploaded in challan, that will be like payment is made. Once you get the generate the challan, there will be something called CPIN, common portal identification number generated, which is a 14-digit code, and once you make the payment, CPIN will become CIN, challan identification number, which is nothing but a 17-digit code. The 14 digits CPIN plus 3 digits bank code will be taken as CIN. So challan identification number. In some cases, the bank code may be 4 digits also. This is for your general knowledge. Now, sir, the e-cash ledger, whatever the amount the payment you have made, that will go and reflect in e-cash ledger, and e-cash ledger is maintained in form GST PMT 05. Once you generate the challan will be valid for 15 days for making the payment. So within 15 days, you can make the payment. Next, there are various other small points, all that you can just ignore or just go through once. And obviously, see, now in GST there are no physical challans, only online challans. Whatever the amount you have to pay, whether you have to pay CGST tax, IGST tax, CGST penalty, SGST penalty, late fees, whatever it is. So no physical challans, only online challans, and all the multiple payments, will be covered under single challan, no matter whatever you have to pay. Sir, I should pay tax, I should pay late fees, I should pay penalty, I should pay interest, or any other payments you can pay using one single challan. That is what the concept. Right. So that is with respect to generating the challan, making the payment, depositing the cash, all that. Sir, how do I utilize e-cash ledger balance? You know, e-cash ledger balance, if you see e-cash ledger format, if you see, sir, e-cash ledger has 4 major heads: CGST, SGST, IGST, GST compensations. In case of SGST, there can be a scenario where it can be UTGST also. Okay. Sir, each major head will have 5 minor heads. One is tax, interest, late fee, penalty, and others. These amounts, whatever are there in these heads, see, we call as major heads and minor heads. Suppose you have liability in CGST tax 100, but you have money in IGST tax 500. Sir, we cannot use that IGST tax amount to CGST tax. You understand, this is not e-credit ledger, this is e-cash ledger, and you all know, sir, if you have liability in CGST tax, you should also have the cash balance only in CGST tax, then only you can set off that. If you don't have the balance, or you have balance somewhere in different head, that balance you can transfer to the required head. That means I have money in IGST tax, but liability is in CGST tax, or liability is in IGST late fees, anything. So First, wherever I have money from that account, I can transfer the money to any major head, any minor head. Okay, I can say from one minor head of major head, the balance can be transferred to any minor head of any major head. So straight away set off is not available. So what we can do, we can transfer the money first to the required balance and then we can go for the set off. So I repeat, intra head adjustment, inter head adjustment is not allowed here. But sir, money from any required head you can transfer to any required head, so that the liabilities can be set off. That is what the concept, simple. So first what we should do, first we should transfer the funds to the required head, then we should go for the set off. So for transferring the funds, for transferring the balance, we can use the form GST PMT 09. That is what the concept, GST PMT 09, we can use that particular form. Okay, so that is one thing. And one more interesting point is here, as I told you, sir, balance in e-cash ledger can be transferred from one head to any another head. But also here, what we can do is, sir, balance from e-cash ledger of one distinct person, you can transfer it to another e-cash ledger of that same distinct person. For example, I have registration in Tamil Nadu and Karnataka. Sir, I have two registrations, Tamil Nadu registration and Karnataka registration. In Tamil Nadu e-cash ledger balance, I can transfer to Karnataka e-cash ledger balance. But from this Tamil Nadu e-cash ledger balance, I can transfer to Karnataka IGST or CGST heads only. I can transfer it. So if you want to transfer to Karnataka GST head, you cannot directly transfer. But once the money from Tamil Nadu e-cash ledger, it goes to Karnataka e-cash ledger. Again, within Karnataka e-cash ledger, you can transfer the money from any head to any head. That means direct bus is not there to Karnataka SGST balance, but I can first go to CGST or IGST accounts, and from there internally I can transfer again to SGST. So I repeat, sir, one e-cash ledger balance of a person can be transferred to e-cash ledger balance of the same person of a different registration. But the only condition is in this e-cash ledger, that means from Tamil Nadu to Karnataka I am transferring. Sir, in Tamil Nadu I should not have any liability. So after closing all my liabilities, I can do this transfer. Okay, that is what another point. So can be transferred to major heads IGST and CGST of another e-cash ledger of the distinct person. And for doing this, there should be zero liability in this particular e-cash ledger in this particular state. Okay, so that is what the point. And as I already told you, we can transfer only to IGST and CGST, and once you go there internally, you can transfer it from anywhere to anywhere. That is what the point with respect to transferring cash ledger balance. So that is with respect to e-cash ledger. Okay, so this is what the concept which we have discussed. So the next one, if you see the e-credit ledger, as we already know, when you file your monthly 3B returns, automatically the e-credit ledger balance will, the ITC balance will come and reflect in your e-credit ledger, and that is nothing but used only for making tax payments only, not for any other payments. That means you cannot use it for paying interest, late fee, penalty, all these things. You can use it only for making tax payments, not any other payments. That we have already discussed. How do you discharge the tax liability using ITC balance? Now, there are some clarifications asking here, sir, whether e-credit ledger balance can be used for making payment of any tax. See, you can use e-credit ledger balance for paying any tax, but other than the tax liability under reverse charge mechanism. So the tax liability under reverse charge mechanism, you cannot pay through e-credit ledger balance. You know, you should be paying it only in cash. Sir, can the amount available in e-credit ledger, can I use it for making payment of any liability other than tax? Just now we have discussed, sir, it can be used only for making output tax payments, and you cannot use it for paying interest, penalty, late fees, or erroneous refund sanctioned in cash. All these things should be paid only in cash. You cannot use e-credit ledger balance. Next, amount available in e-cash ledger. E-cash ledger, can I use for making payment of any liability? Of course, cash ledger is just like money, sir. You can use it for anything: tax, interest, late fee, penalty, erroneous refund, whatever it is, anything you can use e-cash ledger. That is what with respect to certain small clarifications there. Next, e-liability register. If you see e-liability register, sir, how do we discharge the liabilities? What is the order of discharging the liabilities? Now, the first thing, we should discharge the previous tax period liabilities. Next, current tax period liabilities. Then any liability under section 73 or 74 is there, then you can discharge those. That means if there is any demand notice under section 73 or 74, you cannot discharge those liabilities without discharging your previous tax period liabilities. So first, that means, for example, without discharging Jan month liability, you cannot discharge Feb month liability. Okay, without discharging all the till date tax liabilities dues, you cannot discharge any liability which is given as demand under section 73 or 74. That is with respect to e-liability register. And parallelly there are benefits of new payment system, all that stuff. You can just go through this. No more queues, no more waiting for making the payments, because payments can be made 24/7. Immediate online receipt. Even if you buy something in Amazon, Flipkart also, online receipt immediately will be given. Single challan for making all the multiple taxes. No need to pay like generate separate challan for CGST taxes, GST tax, interest, late fee, all that stuff. For all the taxes, one single challan will be sufficient. Tax consultants can make payments on behalf of the clients. Earlier also we were only doing, now also we are only doing. Greater transparency. Online payment made after 8 p.m. will be credited to the taxpayer's account on the same day. That is only for some banks. All the banks, they are not providing that. And one important advantage is quick revenue to the government treasury. That is what the benefits. Okay, right. Here very important point, one very important point which I have missed out in the book, has given us notes here. See, there is what are the payments which you should definitely pay only in cash under GST? Sir, one is RCM liability, the other is interest, late fee, penalty, and others. Next, erroneous refund you have taken in cash, that you should again give back to the government only in cash, because you have already received the refund. You applied refund wrongly, they also granted wrongly, and they are asking you the money, so you should return that refund the refund to the government in cash only. Next, composition tax, TDS and TCS payments. Sir, these things only to be paid in cash. See, now the next one is very important topic, interest calculation under section 50. You know, interest calculation, if you see, there are three different cases here. Sir, interest calculation number one, you are paying late the taxes, and because of that interest will come into picture. Here, when you are paying the taxes late, please understand, why are you paying the tax late? Sir, delay in payment of tax is happening because of delay in filing the return. Sir, I am filing the return late, because of that my tax payment is being late. Now I am paying interest. And you know, sir, for example, August month return I have to file by 20th September. I am filing it on 25th September. So 5 days delay. For that 5 days delay, interest will come. And you know, the interest will come on net liability. There is one small amendment here, one important amendment here. That is, sir, for example, listen carefully, very important point. Sir, you have 10,000 liability, and this is August month liability, and you have to file the return by September 20th, and you should be paying the taxes. Now imagine you are filing this on 20th November. When you are filing this on 20th November, you should pay interest for this particular period, September 20th to like September 21st. Let us assume we have 10 more days left in September. Next, October 31 days, and November 20 days. So 161 days. Sir, for 61 days you should pay interest. Okay, for 61 days you have to pay interest. Okay, September 20th, leave 20 days, due date is still September 20th. From 21st you calculate, 10 days are still remaining in September, 31 days in October, November 20 days. November 20th I am filing, sir. 61 days interest will come. But 61 days interest will not come on 10,000. But 61 days interest will come on the net tax liability, as you already know. So that means gross liability minus ITC balance. One more twist here is in the story. Imagine, sir, I have already a balance of 500 in my e-cash ledger. From when to when? From the due date of filing this August month return. That means from 20th September till actual date of payment, 20th November. So e-cash ledger balance is 500 rupees till November 20th, and e-credit ledger balance is 2500. Okay, now sir, gross liability 10,000 is there. 10,000 minus, you know, 2500, that is already the provision which we know. And also, sir, now we are going to reduce 10,000 minus, we are going to reduce 10,000 minus 2500, you know. But the new thing is, sir, even the cash balance whatever is there in e-cash ledger from the due date of filing that August month return. Here August month liability only, we are discharging. Sir, August month return, the due date 20th September. From 20th September till the date of payment, whatever is the amount lying in e-cash ledger, imagine 500 is lying, that also you reduce, and on balance amount you pay. On balance amount you pay, that is 7,000 into 18% into 61 divided by 365. So 211 rupees will be the interest. Hope you are understanding that. That means, sir, because of delay in payment of delay in filing the return, there is delay in payment of tax. Then the interest will come on gross liability minus e-credit ledger balance minus e-cash ledger balance, whatever is there from the due date of filing that particular return till the actual date of filing the return. There is still the payment of tax, all that. Sir, whatever is there on that e-cash ledger also we will be removing, and balance amount whatever is there, that alone will be subjected to interest. Okay, so that is what the concept, that is the new amendment there. And of course, sir, if at all any other case, why delay in payment of tax? Any other case, sir, not because of delay in filing the return, sir, any other case, you forgot to give the invoice in that particular return, all that stuff, so like that, any other reason, but not for delay in filing the return. In that case, sir, GST liability, the interest will be on gross liability, not on net liability. That you can just go through this example here. So this is the example 121. So you can just go through this, and this example I have improvised and I have shown you, just discussed right now. This is the answer. So you can just pause the video and take a screenshot and check that, or whatever it is. And the same question I have improvised to teach the amendment also. So we have discussed amendment also with the help of this particular example. Hope it is clear for you. Now, the last case, sir, ITC. Sir, ITC wrongly availed and utilized. For that, what is the interest, sir? ITC wrongly availed and utilized. What is the interest for that? ITC wrongly availed and utilized, the interest will be only when the ITC is utilized. Sir, when we can say ITC balance has been utilized, now we have to check the closing e-credit ledger balance, and if the closing e-credit ledger balance falls below the wrongly availed ITC amount, then that month in which the closing balance has fallen below, we can understand wrongly availed ITC has been utilized. So when the wrongly availed ITC has been utilized by filing one particular 3B, so let us assume June month closing balance has fallen below the wrongly availed ITC. Imagine, sir, I have taken 50,000 ITC wrongly. 50,000 ITC wrongly. Sir, now if you see in this particular month, the closing e-credit ledger balance is falling below 30,000, 50,000, sorry, below 50,000. Which month closing balance is that, sir? That is June month closing balance, sir. June month closing balance means in June month only you have utilized that wrongly availed ITC. So let us assume here 50,000, as I told you, wrongly I have availed ITC. 30,000 is the closing balance, means what? 20,000 wrongly availed ITC has been utilized. Balance 30,000 is still lying in e-credit ledger. So this shortfall is happening in the month of June. How it will happen in the month of June? By filing the June month GSTR 3B. By filing the June month GSTR 3B. When you are filing June month GSTR 3B, you please check that. And what is the due date for filing that 3B? You check that also. Whichever is earlier, that will be the date of utilization. From that, interest will start calculating till the date of payment. Till the date of payment. So June month return, imagine I am filing on 15th July. 15th July or 20th July is the due date, whichever is earlier. 15th July is earlier. Till the date of payment, sir, till the date of payment, I am paying this on somewhere 18th September in August month 3B return, imagine. Then, sir, till that 15th July is no, from next day we will start calculating the interest. So, 16th July till 18th September, interest will be calculated and it will be paid. And understand, when wrongly availed ITC has been reversed, you can reverse wrongly availed ITC either in ITC balance if it is there, or can be reversed in cash. But if you are reversing the wrongly availed ITC and if it has been utilized, how much ever has been utilized, on that utilized amount, interest will be paid, to be paid only in cash. So interest amount, to be discharged only in cash only. So wrongly availed ITC, you can reverse either using ITC balance if you have that, or cash balance. No need to worry about that. Okay, so that is what the point. Let us see one small exam question here. If you see, Mr. Broker is wrongly availing 1,25,000 ITC at the time of furnishing the return under section 39, that is GSTR 3B of October month. October month he is wrongly taking 1,25,000 ITC. Okay. Not utilized that for output liability for the month of October. That means that is not used in October. Okay. He utilized 75,000 from the wrongly availed ITC of 1,25,000. So out of 1,25,000 is using 75,000 in the month of November. So what we should do now? We should check this November month 3B is filed on what? Because that November month 3B due date is 20th December. Okay. So the broker has paid amount of wrongly utilized 75,000 on 10th March. That means interest will come till 10th March and reverse the unutilized 50,000 on 20th March. If you see, sir, out of 1,25,000, he has taken 75,000 and used it. 50,000 he has not used. That means only on this interest will come. Only on this interest will come. On this interest will not come. So on 75,000 interest will come till 10th March. From when? From November month 3B filing date, or due date, whichever is earlier. Okay, we know that interest will come on 75,000 till 10th March, that we know. On 50,000 there is no interest, please understand. They are asking calculate the total interest payable, rounding off to the nearest rupee, if broker files 3B of October on 18th November. 3B of October, when he is filing, is it relevant for us? No, because in October month he did not utilize wrongly availed ITC. Please understand that. So for us it is completely irrelevant. For us it is completely irrelevant. Okay. So this is not required. 3B of November, we know in November only utilization is happening. That is done on 25th December. That means November month return actually being filed on 25th December, but due date is 20th November. Sorry, 20th December. And they told clearly there is no extension of due date also. That means, sir, I can understand from 20th December till 10th March, we have to calculate interest. 20th December, if you see, that means in December total 31 days. 20th December means 20 days gone. Sir, I have still 11 days in December. Jan 31 days. Feb, this is 28 days. March 31 days. You should check whether this is a leap year also or not. And this is financial year 22-23. That means it is not a leap year. Sorry, March 31 days will not come. March only 10 days will come. Okay, 8, 9, 10, 0, 1, 2, 5, 7, 8. 80 days we should calculate interest. Yes, if you calculate interest for 80 days, 75,000 into 80 divided by 365 into 18%, you will get 2959 as interest amount. This should be paid only in cash. That is what the concept. This should be paid only in cash. Hope it is clear for you. Okay, this is like past exam questions, CA final November 2023. So you can just pause the video and check, or go through the question if you want one more time peacefully. So with this we are clear with interest calculation also, and there are some small clarifications here. Sir, while calculating this wrongly availed ITC, whether we have utilized or not, with respect to IGST, the wrongly availed IGST, I can say I have utilized it only the combined ITC balance of CGST, SGST and IGST, all these things, CGST, SGST, IGST, all these things put together, if that is falling below the wrongly availed IGST amount. Suppose for example I have wrongly availed 10,000 IGST, and in that sir, when I can say that I have used that amount wrongly availed 10,000, when I can say that has been utilized, when all the ITC balance of all the ITC balances of CGST, SGST, IGST put together falls below 10,000, then only you can say it has been utilized. Otherwise we cannot say that has been utilized. Clear? So there is what one clarification. So the next concept is TDS, TCS. We understand TDS, TCS are two sections, section 51 and 52. TDS, first one, coming to section 51. The TDS rate, because it is 51 percentage is 2%. Remember that way. Section 52 is TCS. Earlier it was 1%. Now they made it 0.5%. So it is 0.25% plus 0.25% TCS rate. I repeat, TDS rate is 2%, TCS rate is 0.5%. Okay, please be careful with that. Now we are discussing TDS concept. Let us complete this TDS concept. Sir, first, TDS is applicable for whom, sir? This is applicable for government departments or establishments, local authorities or governmental agencies, or the new fellow added here is registered person buying metal scrap from another registered person. Okay, metal scrap dealers, both are registered, then TDS provisions will come into picture. Government boards, authorities or bodies, societies, government societies and public sector undertakings, for these people section 51 TDS provisions are applicable. So when they are making the payment, where the contract value, I repeat, not the invoice value, sir, the contract value, if the single contract value is exceeding 2,50,000, so understand, for them, if the single contract value is exceeding 2,50,000, even if it is equal to 2,50,000, it is not applicable, sir. It is single contract value, it is greater than 2,50,000, then only TDS provisions are applicable. So TDS provisions are applicable when the contract value is greater than 2,50,000. I repeat, if the invoice is just 10,000 also, no problem, TDS will come into picture. But contract value, single contract value should be greater than 2,50,000, then TDS provisions are applicable. And please understand, if the supply is happening, for example, so these people, for them TDS provisions are applicable means these people are the recipients, these people are not suppliers, these people are receiving something, and when they are making payment, while making payment they have to deduct TDS under section 51. Okay, now the concept is between themselves itself, if anything is happening, TDS provisions are not applicable, section 51 is not applicable, except for metal scrap dealer. We both are metal scrap dealers, we both are dealing with ourselves, section 51 TDS is applicable. But you are a public sector undertaking, I am a public sector undertaking, we are transacting with each other, even if it is greater than 2,50,000, TDS provisions are not applicable. But I repeat, if we both are metal scrap dealers and we are registered under GST, we are dealing with each other greater than 2,50,000, we should follow TDS provisions. That is what the concept. Okay. Now, sir, for them, persons not liable to TDS, we have discussed. And when TDS shall be deducted, as I told you, sir, single contract value exceeding 2,50,000. Okay, rate of deduction is what? 2% on the payments what we are making. And please understand, TDS is not applicable for exempt supplies, and TDS is not applicable for unregistered suppliers. When the supplier is unregistered or when the supply itself is exempt, TDS provisions will not come into picture. Not only that, sir, TDS provisions will not come into picture when location of the supplier, this is important point, location of the supplier and place of supply both are falling in the same state, but recipient is registered in a different state. Okay, in such case TDS provisions are not applicable. As I was given, as I have given example here, supplier and place of supply are in Tamil Nadu, but recipient is registered in Karnataka. TDS provisions are not applicable. TDS provisions are not applicable. That is what the concept. Okay, so if you see the TDS provisions, the TDS I should deduct on what amount? You should deduct on the value other than GST. Excluding GST, you should deduct the TDS on the value, and that whatever has been deducted should be deposited to the GST department by 10th of the next month by filing a return called GSTR 7. Okay, so these are the details. Next, if I give you an example here, see, sir, there is a contractor who got the contract to construct or repair the roads with the local authority, and the contract value is 10 lakhs. Sir, this is an interest rate supply. Imagine GST rate 18%. Imagine. Now that local authority is making a payment of 1 lakh. So I repeat here, contract value should be greater than 2,50,000. Invoice value can be anything. So invoice amount, like let us assume they have given 1 lakh and the payment is due. And when the payment is due, when they are making the payment, sir, they should deduct TDS. So now what the local authority will do? The local authority will pay to the contractor, sir, 98,000. That means reducing 2% on the value, that is 1 lakh. So 98,000, and they will also pay the CGST 9%, SGST 9% to the contractor. And now what the contractor will do? Contractor will file his GSTR1, file his GSTR3B. We know all these things. He will pay his tax liabilities, everything, and he close that. If the local authority is registered, yes, of course, local authority is registered, that will get reflected in local authorities GSTR2B. Now the concept is all about local authority. What they should do? Local authority, as a person deducting the TDS, they should take the 2,000 rupees and give it to the government by filing GSTR 7 by next month 10th, and that amount whatever has been deducted as TDS and deposited by local authority with the GST department, that will come and reflect in the e-cash ledger of the contractor. So whatever the TDS has been deducted by local authorities, all these people from the contractor, will be deposited to the GST department. GST department will give the same amount to the e-cash ledger of that particular contractor. Okay, so that is what the concept. As I already told you, BSNL, a public sector undertaking providing some services to Greater Chennai Corporation Local Authority. For both of them, Section 51 provisions are applicable. So anything happening between them, TDS provisions will not come into picture. No matter what is the value, as I told you, it is greater than 2,50,000, still TDS provisions will not come into picture. Sir, suppose Vishnu is a registered metal scrap dealer, and also SSME Private Limited is again a registered metal scrap dealer. Sir, sale of metal scrap for 4 lakhs plus GST, we are doing that, greater than 2,50,000, but still TDS provisions are applicable here. I cannot say we both are like subjected to Section 51. Between us anything is happening, TDS, between you anything is happening. For that purpose itself, we have got Section 51 into picture. That is what the concept. Okay. So this is the amended part. Be careful. And there is here, if you see one more small example, a comprehensive question regarding this. So here, if you see this question, there are particulars and there is total contract value given here. The total contract value including GST, but the payment due here is excluding taxes, my dear friends. Accordingly, just go through this question. Actually, a very good question covering all the adjustments. Just pause the video, just go through this. A very good question actually. Spend some 5 minutes time and you will understand. You will cover all the concepts here in this particular question. So with this, we are done with TDS chapter. TDS topic, sorry. Okay, with this we are done with TDS topic. So students, hope you have enjoyed watching this lecture. Share this video with your friends who are in need of this, and enjoy reading. Once again, wishing you all the very best. This is your Mr. GST signing off. Jai Hind.